Welcome there, investorholics and friends. Today we'll be taking a look at MVR, which is the VanEck Vectors Australian Resources ETF. So this ETF might be of interest to you if you have a positive view on the Australian mining sector, as it allows you to own all the best mining companies in a single trade. That's what ETFs are. We're buying a bucket, using a bucket to buy all these big companies. Australian miners are amongst the best and most highly regarded in the world. So if you do buy this ETF, you would be buying Rio Tinto, Fortescue Metals Group, BHP, and Newcrest, just as an example. Hey there, investorholics. This is Scott. Crack the Sky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your personal finances, expand your investment horizons, and crack your financial sky. Okay, let's jump right in here. MVR gives investors exposure to a diversified portfolio of ASX-listed securities with the aim of providing investment returns before fees and other costs which track the performance of the index. The index is the MVIS Australia Resources Index. It's a pure play rules-based Australian sector index that combines benchmarking with blue chip characteristics by tracking the performance of the largest and most liquid ASX-listed companies that generate at least 50% of their revenues or assets from the Australian mining sector. Management style, it's pure replication of the index. Y factor, we get some diversification across Australian resources. In the ETF invests across the range of Australian resources companies, including BHP, Rio Tinto, Woodside, Newcrest, and more in one trade. Benefits from Australia's international trade. Resource companies leverage off Australian international trade partners, including growth nations such as China and India, and more developed countries such as USA and Japan. Tactical exposure, so target investment position to one of the pillars of the Australian economy and other and our major exports, I should say. So yes, pretty much one of the bigger sectors of the Australian economy. Okay, so we had a net asset value of $30.78, trading just below that when I closed out the research at $30.75, market cap of $131.2 million, which is not the smallest, but nowhere near the biggest, kind of on the lower end of scale wise. Management cost 0.35%, not too bad. Distribution, you would be semi-annually in January and July. Getting myself a bit confused there. Dividend yield of 3.88%. Percentage of assets in the top 10%, top 10 holdings add up to 59%. The ETF has a PE, price to earnings ratio of 12.7%, which is not massively high, but not massively low either. Price to book, you're looking at 1.9%. This ETF could be appropriate for investors seeking exposure to a diversified portfolio of Australian mining companies, as we kind of touched on before. So the individual index components are determined using a stringent rule-based methodology focused on liquidity, with a minimum of 20 holdings, each with a maximum weighting of 8%. So you're not getting overweight on any particular company, which smooths out performance over the long term anyway. Further research, which we should always be doing before we contemplate a buy. Check out MNRS, QRE, or OZR. They're all similar type alternatives to MVR. Okay, let's just take a quick look at the top 10. Rio Tinto, BHP, Fortescue, Newcrest, Woodside, Santos, South 32, Northern Star, Oz Minerals, and Mineral Resources. So a nice mix of the bigger end of the mining industry in Australia. Quickly look here at the performance history. So total return since inception, 8.43%. Dividends since inception, averaging 3.12% per year. Pretty good total return over the last 5 years, looking at 17%. So that's kind of a reflection on what's been happening in the mining industry over the last 4 or 5 years. If you had bought in at the bottom of the coronavirus crash at the end of March last year, you would be sitting on about a 40% return, which isn't too bad. Always remember, investing of any type carries risk. So if you are looking at investing in individual companies, different industry sectors, specific stocks I should say, always make sure you're reading the PDS of the particular products you're buying or getting further financial advice from an advisor. Quickly, would I bother buying this one? Probably not, although 8% since inception isn't too bad, but I'm sure that there are probably some better performing mining focused ETFs out there, which we'll be working through over the next month or so to find. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky in Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.